Ever wondered if your dream home could turn into a financial nightmare? In today's video, we dive into the top 10 US housing markets predicted to face severe downturns, uncovering hidden pitfalls and unexpected declines that could reshape the future of home ownership. As economic tides shift and uncertainties loom, 2024 is proving to be a turbulent year for real estate. The housing market, a dynamic ecosystem, is influenced by a myriad of factors like demographic changes and economic policies, so let's dive into it. New York. The housing market in New York City has been volatile lately, especially in Manhattan. A pattern of urban flight was accelerated by the COVID-19 epidemic, with many people relocating to suburban and rural areas from the city. The rise in distant employment and the high cost of living persist in discouraging potential purchases, even with some recovery. There will be a market correction in 2024 as a result of an imbalance between supply and declining demand, particularly in luxury markets. Ben Johnson, the CEO of Big Ben and a real estate agent, said, like San Francisco, New York City has also seen a drop in home values due to the flexible work lifestyle imposed by the pandemic and the associated high cost of living. The rental market also gets softer following weaker demand for residential property. At the moment, the average cost of a home in New York is $742,930. Johnson predicted that by year's end, it may fall by 5% to 8%. San Francisco, because of its thriving tech economy, San Francisco has long been known for its exorbitant housing expenses. Nonetheless, the requirement for workers to reside close to their places of employment has decreased since remote work has become a standard feature of many businesses' practices. We anticipate a decline in housing costs as supply exceeds decreased demand, in addition to the city's problems with homelessness and high taxes. Ben Johnson claims that a city that has long been among the most expensive locations to live in the nation is going to see a decline. The high cost of living, with outmigration and a trend where most tech companies are allowing some workers to work remotely, has seen San Francisco's real estate market begin to fall. He said, home values in the city could drop by an estimated 5%, 10% by the close of the year. Miami, an inflow of people looking for pleasant weather and tax breaks has boosted Miami's real estate market. But the outlook for 2024 is dismal due to the high cost of living, worries about climate change, and increasing competition from neighboring Florida communities. Miami's real estate market is probably going to see a decline as purchasers grow leery about the long-term effects of sea level rise and the related expenses. The average cost of a property in Miami is $579,125, an 8.7% increase from the previous year. Johnson did note that by year's end, environmental concerns might result in a 3%, 5% decrease in pricing. Miami's housing market is threatened by overvaluation and the steadily rising sea levels, something that many property investors view as a reason for avoiding Miami's housing market. Further increased insurance, lodging, and proceedings fees because of climate change are making homes unaffordable. Austin, Texas. Austin has become a tech and cultural hotspot, but its real estate market has been a roller coaster. Local buyers now face obstacles as a result of the increased home prices brought on by the faster growth. Rising living expenses and possible economic downturns may reduce demand and drive down property prices. Environmental issues like water scarcity may also have an impact on a decrease. A recent uptick in inventory and new construction projects has evened out the market between buyers and sellers and cooled off housing prices, said Eric Preston, the CEO and founder of Agent Launch. This trend should continue for the remainder of the year, especially with mortgage rates increasing. Home builders in Austin predict a greater number of home sales resulting from the state of the housing market. Preston stated that although the recent median sale price in Austin was $567,000, the median listing price was $650,000 in May 2024. However, by the end of the year, that figure might drop to $550,000 or less. St. Louis. Preston reported a 2.2% decrease in St. Louis property prices from the previous year. Preston projects that by the end of the year, the city's median home price of $221,000 will have dropped to $200,000. There are typically multiple factors as to why a market cools, but St. Louis has been experiencing an affordability crisis due to rising taxes in some municipalities. Please like and subscribe if you like the videos and share with your friends and colleagues. Washington, D.C. According to Preston, the housing market in Washington is expected to contract by 10.2% in 2024. The primary culprits are a lack of buyers due to economic issues and mortgage rates. According to him, the $602,000 median home price may decrease by an additional 3% to 5% before the year is up. Seattle. Both high living costs and the shift to remote work in the tech industry are cooling Seattle's market, Johnson said. Home values could drop by 3%, 5% as more people choose not to live in the city. For reference, Seattle's average home price right now is $884,828. Chicago. Johnson blames high property taxes, crime rates, and a lack of population growth for Chicago's falling home prices. Chicago's housing market may see a decline as population growth stagnates and the city faces fiscal challenges. The average cost of a home in Chicago is $298,397. By the end of 2024, Johnson said that could fall 2%, 4%. Las Vegas. Economic bubbles have historically been associated with Las Vegas, and the city's real estate market is no exception. The post-pandemic pricing boom is beginning to level off as the leisure sector recovers more slowly and living farther away from job centers becomes less necessary with remote work. The possibility of fewer tourists and associated economic pressures could make the housing crisis worse. Considering how Las Vegas relies heavily on tourism and entertainment, both hit hard by the pandemic, the chances are high that home value in that area will experience a drop, Johnson said. As of right now, $422,880 is the average price of a property. Johnson stated that by year's end, that is anticipated to decrease by 4%, 7%. Honolulu. The average price of a property in Honolulu is currently $794,253, but according to Johnson, it might decrease by 4% to 6% by year's end. The tourism sector, a vital pillar of the local economy, is predicted to continue to falter, which will cause Honolulu's property market to cool. Several factors, such as remote work, affordability, environmental concerns, and economic policies and interest rates, have caused markets to plummet. So there we have it. The top 10 housing markets that are plummeting in 2024. That's it for today's video. Thank you for sticking around. What was more surprising from the above reveal? Remember to hit the like button and don't forget the subscribe button on your way out.